I did a video on GEO around 5 weeks ago, and it was around $10 per share, and it went down over 16% in one day. And I gave my assessment on the company, and I said it's still too expensive for me, and I would be interested in GEO at $7 per share or below. And now GEO is $7.55 per share. But my video before actually got a lot of dislikes, a lot of angry comments of people telling me GEO's fair value is $20 to $25. And again, you have to pay attention to this on YouTube. There are a lot of people that do those videos like I do. Whenever it comes to a cult stock, like Tesla is a cult stock, like Nvidia, even GEO is some type of a cult following type of stock, they always want to say that the stock is undervalued so they don't upset the followers. But I'm trying to be honest with you, and I believe GEO is expensive at $10 per share, and at $7 per share or below, it's interesting. And I believe GEO is extremely interesting at those prices, and it's been falling down like on a cliff from $12.50, and now it's at $7.55. And I believe the stock is getting very, very interesting at those prices. So I'm gonna give a quicker assessment on the company. If you're looking for a deeper analysis, I have other videos, but I would encourage you to watch this one if you are familiar with GEO, and if you want a conclusion on my valuation model and how much I believe GEO will return over the next 5 years from today's prices. So again, I hope you enjoy this video. Now, to get started, just a quick overview. GEO owns a lot of private prisons in the United States and other places around the world. They also own something different from what CoreCivic has, which they actually have those watches like tracking devices for probations. They have other type of watches like this one. They are striking contracts with the government, with states, and this is a high margin business, and this is a high growth area for GEO. And if you're interested in learning more about it, you can check out GEO's website to learn more about their devices. But this is what I want to get into in this video. And 2022 was a pretty good year for the company. They had, the highest quarterly revenue in history. The adjusted EBITDA was pretty good, but the company actually made some plans. The first plan they made, which is very important, is to actually reduce their net debt by 175 to 200 million annual, and the net leverage below 3.5 times, and then 3 times by 2024. But 175 to 200 million of annual debt reduction. And this is a number we can use to estimate our valuation model and upside potential with GEO. But if you didn't know, GEO actually had very bad debt structure, and they were almost going bankrupt, or they're gonna eventually get liquidated. But in 2022, they made a pretty good transaction to actually fix those type of payments in the future in some type of way where the company can actually afford them. So this has been amazing with GEO. And the company is trying to highlight how undervalued the stock is on their presentation. They're saying it's trading 6 times enterprise value to adjusted EBITDA and 15% free cash flow yield, which is great. And I believe GEO is undervalued, but I normally don't like the management actually trying to show off their valuation in their presentation. It's normally a red flag to me, but I believe GEO is undervalued. So I'm going to let it pass on this one. But this is their guidance, and this is the main issue I had with the company when GEO was trading around $10 per share. And if you look at their EPS guidance is between 80 cents to $1.02. So at $10 per share, GEO was trading anywhere between 10 times earnings to around 12 to 13 times earnings. And for the kind of debt that GEO had, I saw that this is pretty expensive. But based on $1 of EPS, if they can actually get to $1 of EPS, which is the higher end of the range, now GEO is actually trading at 7.5 times earnings. Now this to me is much more interesting than 10 to 13 times, 7.5 times to a maximum of 9 times earnings if they couldn't get to it. This is actually an amazing valuation on a company like GEO, as they have pretty undervalued assets. And this is how I'm going to value GEO in this video, and it's mainly on the debt reduction and how much interest they can actually save from the debt. Now, if you look at their presentation over here on the guidance, they have interest expenses between 212 million to 217 million. This is even more than the net income. This is massive massive interest expense. And if GEO can actually save this interest expense by actually paying down the debt in the future, this is going to save the company a lot of money. And I believe it's going to be an amazing return proposition for shareholders. They don't even have to do buybacks or issue a dividend. If they could just reduce their interest expense, this is going to create massive value for shareholders, in my personal opinion. So looking at GEO's debt structures, they don't have maturities, anything mainly, it's easy stuff, except before 2026 and 2027. And the company is guiding that they're going to pay off 175 to 200 million annual, and their free cash flow is around 200 million. So they might use some of the free cash flow, and then they could do some asset sales and stuff, but they are confident they can pay 175 to 200 million annual. So to do basic math, 200 million annual 5 years from now is around $1 billion. So with this $1 billion, they can actually pay off the 2026 debt, they can pay off some of the debt here, and they can even pay off some of the 2027 debt, which is 5 years from now. Then they're going to run into some issues. Either they're going to have to do asset sales, or they're going to have to refinance the debt at a later date. But if GEO can wipe out $1 billion, which is 50% of their debt off 5 years from now, they're going to have a much better credit rating, they're going to have a much better balance sheet, and I'm sure they can push off those debt 2027, 2028, they can push it off to a later date. So I'm not really concerned of where GEO is in 2027. But if they can actually pay down 200 million every single year, this is going to save them a lot on interest expense, and interest expense is 212 million. So if they can shave off 50%, this is 100 million of savings in terms of the debt repayment. And if we take their lower end of the range of the net income and we add 100 million of interest savings, now their net income is actually 200 million. Now 200 million of net income, if you're following with me, and let's assume GEO trades at 10 times earnings, which I don't believe is expensive. Actually, GEO could trade at 15 times earnings 5 years from now with a much better balance sheet. But just to show you the kind of numbers I'm looking at, and we take that 200 million and we time it by 10 times earnings, this is $2 billion market cap for GEO. GEO's current market cap is 942 million. So we divide that by 942 million, we get around 123% on the upside over the next 5 years with GEO. Now, GEO could trade at 2.5 billion if they trade around 15 times earnings, or around 2.3, 2.4 billion. Or maybe they could actually maybe issue a dividend again whenever their balance sheet is better 5 years from now. So I see a lot of upside with GEO, and I don't see much downside as long as their free cash flow is maintained around sub 200 million, which is around 213, 235, 230, somewhere around the 200 million. I am not concerned with GEO's debt after they actually refinance it, and it's a higher interest rate, which is a value proposition. That if GEO can actually pay off 50% of their debt, and they can save the interest expense from 212 million, and they can save 100 million off of that, this will more than double their net income. Trading at 10 times earnings, this is more than 123% on the upside with GEO from today's prices. So I believe GEO is undervalued at this price, but I'm personally not really touching GEO yet, as I'm seeing better relative opportunities for the risk reward in the market. I'm seeing a little bit better deals out there with a little bit lower risk than actually GEO. But again, I'm pretty interested in the company, so I might change my mind. I might buy it below $7 per share. I'm going to make this decision later, but I do believe GEO is undervalued at such prices. It doesn't mean that it can't get more undervalued. It doesn't mean that the stock cannot go back to $5 or $5.55, which I first bought GEO. It was around $5.55, and I've been in and out of the stock for months and months. So it doesn't mean that it can't go down. I'm not trying to pick a bottom, but I believe GEO is pretty undervalued at such prices. So thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.